let's head to David Cohen. He joins us live from Singapore. He is head of Asian economic forecasting at Action Economics. Welcome, David. So tell us, how big a deal is this cut to the U.S. outlook here?
Oh, I don't think that S&P told the market anything it didn't already know. In fact, that's why although the equities sold off on Wall Street, and we're seeing them sell off in sympathy here in Asia this morning, that the dollar has actually held up pretty well. I mean, after all, the Eurozone has their own problems, and I think the theater will continue as far as the U.S. Budget deficit is concerned. I think everyone understands that the current trajectory is unsustainable.
David, it's an interesting market reaction because you have stocks falling, yet you had the yields actually come down. You had the dollar do okay after this report. I mean, what's this about? People not really taking it seriously that the U.S. could lose its AAA, people not thinking that S&P is credible enough. How do you explain the market reaction?
Well, I mean, certainly it's confused. The knee-jerk in times of turmoil, that the U.S. Treasuries usually benefit. So that despite the fact that the turmoil this time was caused by concern over the U.S. Deficit itself. You know, at the same time, I think everyone understands that the U.S. government has to deal with its unsustainable budget deficit, and there does seem to be some movement by the government in recent weeks that getting some movement toward compromise, although the progress will be slow.
Do you have any confidence that the U.S. government's going to be able to come up with a significant enough and credible enough plan very soon to get this thing under control?
Well, I don't have any doubt that they'll be able to come up with some compromise for extending the debt ceiling before that would cause problems. But longer term, I think there's a recognition that across the political spectrum that they must deal with the entitlements, which are simply unsustainable.
David, I think the worrying thing is that they seem so far apart. And if you have a look at where we are in the political calendar, we've got an election coming up, a presidential election. That it seems very precarious in terms of whether or not the Republicans and the Democrats are actually going to be able to come together.
Well, I mean, essentially, that's what Standard & Poor's was pointing to. But I think, as we saw last week, although it went down to the wire, the political parties were able to come up with a compromise as far as the current year's budget is concerned. And I think that they are starting to move off of dead center. Each of them was posturing, but the Democrats waited for the Republican Congressman Ryan to present his proposal, and at which point President Obama responded after having laid back all this time. So there does seem to be a little movement on that front right now, and I think the message from Standard & Poor's is that the market, although they are patient, will not give them an infinite amount of time. You know?
Yeah, maybe the nudge they need. David Cohen, thanks very much. Appreciate it.